All right. Everyone here. Hello. All right, guys. Yo. Hey, Mark. Thank you, Paul. All right. We'll get started. Uh, S&P continues higher. We're building that pressure right above the neckline, and it's looking good. It's looking good. We can draw this pattern right here on the S&P 500. There it goes. Okay. So we have the 1, 2, 3. As we mentioned yesterday, we're going to be bullish for today. There's no reason not to be. So we're going to look for something like this. And then it's going to build that pressure, and then we'll continue on higher. So why don't I draw it like this? Why didn't I do that? And the reason is because this is still part of the thrust up move, right? So we count from the highest point, and then when it starts to reverse, that's the first wave. So this is the first wave right here. Okay, that's a 1, 2, 3, and up. All right. So right now this is not fully developed. You cannot say it's fully developed. It's not valid. It looks appealing to the eye, right? But it's not developed. This point, this one, and this one are invalid. They're part of the previous wave up. Okay. But again, you kind of put it in there, see if it works, and go from there. All right, so let's go through the markets real quick. Equal weighted S&P 500. It's broken out, looking good. Dividends, okay, broken out. VIX, eh, fuckery move, but it's still outside of the trend line. We could make an argument this is a structure above the structure, right? Um, so we'll leave it like that for now. If it starts to pop through here, then I would be concerned for the bear side. The S&P 500 we just talked about. We're looking for upside. New York Stock Exchange is starting to break out. Okay. And again, you see the first wave is the first counter trend move, right? 1, 2, 3, valid. A little funky looking pattern, but it is breaking out. Dow Jones pushing higher. NASDAQ, right? Right within this channel, and that's what we talk about. So long as it's within the channel, the bias is to the upside, and we can make an argument that it broke out. Okay, so that's bullish to the upside. Uh, Small caps, they broke out, and even this trend line. Okay, smoke. This looks like a fucking mess. It's this is a. I'm just gonna take these things off because it's garbage. Come on, This I'll keep. This I'll keep. All right. So we're going to do something like this. And something like this, which is a rising channel, right? Kind of. This is broken out, so it's no longer needed. We'll just take this one out too. Okay. So this is just kind of like a channel that is forming right now. We'll see how this goes, but for now, bullish, right? Let's look at the fags, and still in a bear channel. I mean, a bear flag, right? So it's broken down. It corrected through time, and we'll see how this is going to perform. My guess, based on the message of the market, we're going higher. Transportations, flaggish, right? It's flaggish. This would be the thrust down move, right? Little weakness there. Uh, what else? What else? China. China is in this big wedge bullish looking formation. China should resolve to the upside. Okay. 1, 2, 3, up. Emerging markets back into structure. It broke down back into structure. When it goes back into structure, it cannot stay short. Emerging markets, kind of the same thing. It went back into structure a while ago. And I think this one is probably better. Yeah, this one is better. So we're testing the bottom of the trend line right here. Japan, right, building that bullish formation to push higher. Okay, it broke down from this wedge, but went right back up. So this is consolidation, a high base. Australia getting ready to pop back out. Okay, you see how much noise there is in here? This is impossible to trade. Honestly, it's not just Australia, it's everybody. You hold long enough, you're gonna end up being, wrong, and then eventually right, and then wrong, and then eventually right, and then wrong. Nifty 50 broke out, bullish. Korea, bullish. Um, well, bullish within this structure, but you can see how it's high basing above the structure, right? Right in here. So, and again, Korea is one of my faves. Europe, forget about Europe. Big pop in Germany, but it is inside of this uh, bear flag, and it's a structure below a structure as well. So, but for now it's bullish. UK probably is going to make its way to the top of the channel, and it's going to probably follow the rest of the market. Taiwan at the top of the channel. Look for the breakout, along with some other ones, right? Just at the top here, getting ready to go. And this is not drawn correctly, but I hate when these lines move. Right? There's nothing here telling us to be bearish. Nothing. Uh, Brazil looks like shit. There we go. You can see it properly, right? 1, 2, 3. Yep. Right. So, a little push higher. This is Saudi Arabia, the House of Saud. This is bearish looking. And, when you have a rising wedge in one direction, it usually moves in the opposite direction. This is the only one that has like a really bearish tone to it. Oil above 40 again, up to 41. Again, this was a really nice area to buy. And now it's just boom. Probably go to the top. Uh, and that's why I said yesterday, take half profits, let the rest go. Right? Bitcoin. Bitcoin. We had a head and shoulders. Uh, what we want to see from Bitcoin is it break for today about 10.8, and then tomorrow it's going to be 10.820, and then 10.792, and so on. So wherever this trend line is, okay. But for right now, indecision, just going back and forth. But we want to see the upside breakout. Ethereum doesn't look all that good. Okay, right at support, you have a structure, below a structure, below a structure. Doesn't look that good. Litecoin looks like shit as well. All right, gold. Gold at the top of the wedge, and this might need to pull back here a little bit, create more of a consolidation before pushing higher. Right, let it consolidate in here, and then we'll see the push higher. Silver, I don't trade it. I don't analyze it. Whenever it goes up, sell it. How about that? I don't like silver. All right. Real estate pushing to the top of the top of the wedge. Commodities breaking out again. Right. This is what we talked about uh, on the private chat. But when you start to see it form a bull flag, right? You had a nice big run up. Then you had a 1, 2, 3 down. Corrective, and now it's breaking out. I'm bullish on commodities. Okay, bullish on commodities. Although I would like to see Australia push higher, and especially Brazil. But Brazil is dealing with their stupid shit over there, like Trump. They're going for herd immunity. So I think that's what's bothering Brazil. Back in the day, we used to call them the BRICS, right? BRICS: Brazil, Russia, India, China. All right. Palladium continues to push higher. Copper broke down, popped back up. Nothing, nothing really to talk about. But this needed to correct. The trajectory was way too steep. Base metals pulling back a little bit. Agriculture pushing up again. I like agriculture. Uh, more upside. Precious metals popping back up. This is just gonna correct and then push higher. It might even come back a little bit more. So it might do something like this. And then you'll get the structure, and then it'll push higher, right? So, all right. Overall commodities, you can see it's kind of the same story, right? Kind of breaking out a little bit. All right. 1, 2, 3, boom. Okay, corrective. Sugarcane continues to push higher. Corn pushing higher. Wheat kicking ass. Steel pushing higher. Soybeans pushing higher. You see, right? Um, can't keep printing forever, and commodities cannot go down forever. So you get uh, you get those two things that come together at the same time, and you can make some money in commodities. You want to go buy a bond that's negative interest rates, or keep your money in commodities where you don't pay any interest, right? So that's also bullish. Dollar. Again, dollar breaking down from this 1, 2, 3 up bear structure, building that pressure right here. This is good if you're a bear, right? It's building that pressure in here, and then eventually it's going to resolve to the downside. That's the likelihood, right? Euro USD broke down. There it is. Broke down. Now it's looking to push higher. It's broken out of this trend line. Okay. It's a confluence of resistance and breakout and resistance. So it needs some time to digest. Same thing with the dollar, right? The pound, nothing to talk about the pound. It's got its problems, you know. I haven't traded that for a while. Turkish lira, high basing. Ruble, high basing, or whatever it's doing here, correcting. And US dollar Canada breaking down from the channel. 1, 2, 3, fully valid. This was supposed to resolve to the downside, but now it broke. So that's problematic for the dollar. Okay. So we'll look for more downside in US dollar versus CAD. Australia pop back up. Okay. Let me get rid of these things. New Zealand dollar, same thing. US dollar versus the won or the yuan. Yuan continues to fall. All right. There it is. There's a breakout in the NASDAQ. See it? Forming that high base. We should see more upside. Start testing this area. If we start testing this area, we've tested it, before. So look for more upside. S&P 500 right at that top of that channel. Remember, yesterday we left it off here. Right here is where we left it off. And then in the overnight, I was expecting more upside, but it consolidated instead. And now it's looking to finally break out. Okay. Needs a little bit of a pullback. And why do I say that? Because it's the first counter trend move. 1, 2, 3, and then up. Okay. So remember, this is not a breakout technically. We need to hook. We need to hook. Can we mark this one as a hook here? Not really. If price did not break above it, then yes, it would have been a hook. But since price broke above it, you can't hook it. I know this is one. This is probably the hardest thing to grasp. I'll be right back.
Mic off. Mic on.
All right, I'm back. So Jolts came in at 6.5. It missed. Okay. And again, these are isolators. And if anything, when they start to miss, all it's showing is that there's stagnation, right? It's starting to stagnate the economy. So um, these are great. Again, when you're at all-time highs, you're looking for that possible recession coming. You want to pay attention to these things. Um, but for now, it's whatever. Balance of trade. This one, this one I care because you can see that we are importing far more. Well, we're net importing far more than we were before. And I was bitching about this one before because it started to hook up. You know, when you start to reduce the net imports, right? You're doing what? You're reducing the export of dollars to the rest of the world, and something is going on there, right? Something is wrong with trade. Now that we're going in the opposite extreme during a recession, well, what are we doing? We're exporting dollars to the rest of the world. We're exporting dollars to the rest of the world. We're net importing more, and we reach levels that we haven't seen until prior to the great financial crisis, and that's not good. That's drainage. That's drainage. When you look at is it this one? If you guys followed along on how to build an economy from scratch, you're going to see that those dollars are, and I don't have a little pencil thing, but you know, um, when you're deficit spending into the productive economy, those dollars are exported, right? And it creates jobs for everybody else except you because there's no velocity, right? So that's not good when you're trying to recover. All right, the overall markets, they're up a little bit. Nasdaq is flat. S&P is up zero point 0.3. Yeah, not too much there. Again, the small caps are leading 1.2% up on top of the 3% yesterday. So it's a very big move, you know. VIX is falling, fading away. All systems go on the bullish side. So any pullback you want to buy based on the message of the market. Hello, James. Nice to see you, my friend. Kind of a funky move this morning, huh? It had a drop, then a pop. Now it's coming back into structure. Yeah, look at these moves. Funky. Look at that. And then it went sideways, then it popped, and it came down. Then it popped up, came down, popped up again. Like, you can't trade that shit. It's very difficult. Very difficult. Look at that. This thing wants to go higher. the small caps. We'll make the PE 193 instead of 93. The fags, they're actually down 0.9%. Interesting. That's why the market is not going anywhere, meaning it's not breaking out. Transport is stuck. Let's look at the fangs individually. Nothing there. Amazon is kind of stuck. Apple, same. Netflix. Nvidia. Nvidia looks good. This is my favorite, by the way. Google. Yeah, except for Nvidia and maybe Netflix. Uh, they look tired. Tesla. I think I think Toyota is the closest to 100 something billion, and these guys are 358 billion in market cap, and then Ford is like 40 or something ridiculous. Uh, Delta, American, Southwest, they're all going up because Pelosi told the airlines, hold on the stimulus package, don't fire yet. Yeah, Google is struggling at 1500. JetBlue the same, Spirit consolidating, Allegiant, uh, Copa, my most hated airline, popped out a little bit. EasyJet, I'm surprised EasyJet is not doing better, to be honest. It's a low-cost carrier. Um, you know, Europe was at least doing a lot better than the U.S. China Eastern Airlines. By the way, aviation in China is opening back up in Asia, I should say. There's definitely improvement. Boeing, Boeing's got problems, but it's like the battle of the scrubs. If you compare it to Airbus, Boeing is actually doing better, right? Boeing is actually doing better. This stupid Virgin Galactic. You can see it's an M pattern, right? This is going lower. It's popping up now, so it's a good place to short. They said that space is going to be like $1.2 trillion industry in the next 10 years, and I think this is kind of recession proof, right? UPS, man. Cargo, air cargo is hot, hot. China Southern, okay. Again, these airlines are going to start flying again here soon to near full capacity. Let's go back to S&P. All right. If this hooks back down, okay, then that's going to be valid. This point. This one is not valid. because it's still in the uptrend, right? This is for aesthetics. 1040, nothing is happening really in the market. I think they're just waiting for that stimulus. That's it, or somebody to come out like, yes, we're closer to a deal. I'm gonna start tap dancing soon. Keep you guys entertained. Ecuador annual inflation down 0.9%, in case you were wondering. There we go. Pushing higher. Look at the NYSE pushing higher, huh? Very nice. Dow Jones pushing higher. Very nice. And NASDAQ. I think we'll focus on this one today. This one has a clearer picture on a small time frame because it's broken out. And again, these red lines on top, these are previous highs, right? Potential areas of reversal. And that's where we got this reversal from, right? So now we're going to go, probably, we're going to go back up to this area and you're going to start testing this area again, which I don't think that's going to last. I don't think it's going to last as resistance. It's going to push higher. So look at it. As soon as I mentioned it, oh, looking good. Magic. Magic. Facebook. Social media brainwashing is hot, baby. It's hot. Let's look at it. This is where people go to indoctrinate themselves. What the fuck? Yep. Well, it's too small. Yeah. Well, here's the way I would chart this. 1, 2, 3, M pattern, flat. Failed, right? It failed. So you kind of have a 1, 2, 3 down. And now this is corrective. The structure right now appears to be corrective. Okay. So at some point, I don't know when, the bias will be to the downside once it breaks. Okay. Maybe close this gap here. I don't know. About 234. So how much has it corrected thus far? Let's measure that. 19%. Now it's down 13%. If it goes all the way to the bottom here, it's going to be about 23%. Okay, so that's Facebook. All right, big drop. Probably some news that came out, but that's been the case, right? Look at this one. Well, backwards. Look at that. Big move up. Big move down. Pop. Drop. Garbage. Garbage. All right, this hooked. Anybody know what the news was? Oh, Powell's talking. Powell said there was no economy threatening asset bubbles to pop, and no unsustainable boom to bust. Jesus, the guy lives in fucking La La Land. This is another one of those rules. From failed moves comes fast moves in the opposite direction. Remember that. If this does not continue to push higher and it pops back in, waterfall, right? You'll see that a lot on a failed break. Fed's balance sheet is remaining steady at 7 trillion. Let's take a look at the debt. Where is it? Where is it? Fed. No, wrong one. The fuck do I have it? Here it is. The last one was October 2nd. Is that right? Anyway, we'll go with that. 3C. 27 trillion. Yay. We're all going to be rich. Rich, I tell you. Rich, rich. 5 minutes ago, Trump tweeted he's feeling great. Yeah, right. Boring day. Shafi's moving upwards as well. Also, you think having many individual savings money is, well, they're not really, they're saving money, they're just not spending it. It's not, the people that are spending it are the people that are getting it from the government, right? Because they have to sustain life. And then the other people, they're kind of holding on. So when you see like the M2 money supply spike, it's not necessarily because people are saving. It's more that they're getting those uh, government dollars, right? Uh, it's the investment does not come from individuals. Um, the investment comes from profit saving. I wish I had something to draw with. But anyway, you increase the deficits, right? And you're pumping into the productive economy. It goes through the household income savings, okay? And those household income savings funnel through to profit savings and end up in asset prices. And every time I hear, oh, there's no inflation, there's no, yeah, CPI doesn't count asset prices because this is where the inflation is taking place. And, if it's not happening in the productive economy, oh well, everything is fine. No, 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 wrong. See, the idea is that they're going to be able to stuff savers with so much money that eventually they'll just get tired and then investment is going to come back into the productive economy. That's the idea. That's what they're trying to do. They believe that, and they've believed that now for 40 years. It's not going to happen. You're never going to satisfy the desire of the top 5%. It's not going to happen. Nope, 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 nope. See, if people were spending more, then revenues would be rising and corporate profits would be rising, right? And let me turn this into log. I put this on the right, we'll make it log, right? Look at that. It's done nothing, 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 right? And now the pandemic hit, everything is falling. Now it's what? It doesn't say, but it's like 1.5 trillion. And this is on a per quarter basis, okay? Per quarter. So, you see earnings per share, and I talk about this often, but I'll say it again. You see earnings per share rise, and you're saying, oh, okay, so they're making money. No, they're reducing the supply of stocks available, thereby making the earnings per share rise, even though corporate profits are not rising. Okay. Couple of questions. Yep, I'm ready. Go, James. We'll look at the Nasdaq. Well, it's going negative now. James Lindy, go ahead. Questions? It's not the only way. No, you can have imports. You can. I'm sorry. Yeah, you can export. You can increase the money supply that way, uh, and you can increase deficits. So it's not just banking. It's just banking is uh, uh, the number one way of creating money. Yeah. But remember, you're putting up collateral, right? Whether it be future earnings or a home, a business, whatever. Pal just said incomplete recovery could still slip into recessionary dynamics. The fuck does that mean? We're in a depression. Yeah. Um, so government deficit is a bond, right? It's an expansion of bonds. So let's go back to the daily treasury statement real quick. And I also want to pull up, where is it? Okay. So last year, where is it? Mm, did I get the right one? Which one is this? Right. So it's look, it's 19 trillion dollars is what it was, and this is not correct. Something is wrong here with the number. So let me go back one. There you go. So it's 14.95 trillion dollars is the amount of bonds that were um, redeemed. Okay, and then they were rolled over, uh, and we issued 19 whatever it was trillion right here. Okay. So we reissued the 14 plus on top of that another 4 trillion, right? And change. So that is deficit. It's a bond expansion. And then you get the QE, and the QE takes those bonds onto the Fed's balance sheet, and from the Fed's balance sheet, they give them cash. Okay? So in that sense, yes, QE is indirectly funding government. The 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 Fed is just the middleman, right? How will the Fed encourage individuals to spend or create inflation? Well, okay, I don't have my drawing tool. Let me see, how can I do this? Let's see if I could do it like this. All right, so let me see if I can. Fuck. I'm not used to this mirror thing yet, but anyway, so When you purchase a bond, you reduce the supply, you increase the dollar amounts. That pushes bond prices higher. And let's say these are the yields on this bond, and yield starts to go lower, right? When the yield drops, and we're near zero now, right? When the yield drops, what happens is it makes money cheaper, and you can borrow at a very low interest rate, and that entices people to go out and borrow. And when they borrow, remember, loans create deposits that create income, right? That's that right here. You create a liability, you're going to create an asset, and then once you spend it, or the recipient of those loans spend it, it becomes income to somebody else, or savings, or both, and then they spend it, and it becomes income savings to somebody else, and somebody else, and somebody else, and somebody else. Okay. Now, when your imports are increasing, and remember that's 67 billion, that is per month, right? So you times that by 12, and it comes out to 600, whatever, 720 billion, let's say. So then you're exporting those dollars to the rest of the world. Now those dollars can definitely come back and be invested in the American stock market, or bonds, or whatever, or even the productive economy, whatever the case may be. But it doesn't affect directly the productive economy. The only way QE can affect the productive economy is if interest rates are low and people borrow. That's it. That's the only benefit. Other than that, QE just pumps up asset prices. I gotta get um, a drawing tool. The fags keep going lower. Hmm. I think at this point, this is the most valid. We need to see something push out of here, right? From the market leaders, or fail, or fail. But the bias, again, so long as it's within the channel, biases to the upside. But we're down 1% for the day. NASDAQ 0.1% of the day. The dollar is not going to crash until interest rates spike. And we didn't look at the 10-year, by the way, but we'll look at it here in a minute. One comment below caught my interest. I thought it would be something you'd like to rip apart. Okay, you can't get a dollar crash until people give up bonds. They don't want them anymore. And when are they not going to want them anymore? When the law of diminishing return kicks in. When the bond appreciation is no longer desirable, right? Whatever it's rising at the time, people say, "Well, I don't want to own this bond. I want to go buy something else." Right? That's the snap moment that I say. And then they start to sell, and when they start to sell, that snowballs, right? And once it starts to snowball, everybody's selling. Well, what happens to price? Price starts to fall, and then that just kind of snowballs. Because at that point, what's the government going to do? Deficit spend more, QE more. You know, that's when you'll start seeing um, the dollar start to fall apart. Where's the eggs? There it is. Starting to fall down, right? Let's go to daily. Okay. Starting to break this uptrend. It doesn't mean that this is going to start to, even if it comes all the way down here, even if it comes all the way back here, right? Could it trigger an event where everybody starts selling? It could. It could. But if it does an orderly kind of a decline all the way back here, did we have dollar collapse in 2013? No, right? We're talking about big kind of sell-offs, right? Big, 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 big sell-offs. Now, the fact that bonds are selling off, that means rates should be rising, right? And they are right there. You can see it, right? But it's in a range, man, for now. It crossed this descending wedge a long time ago and then just went sideways and then popped out. And when you look at the volume by price, the POC, point of control, you're somewhere in the middle here. It should be. Yeah, it doesn't have the volume here, but point of control would be somewhere here. Okay. And now it's just exploring that area. Now, if this starts to pop and you get, 3%, uh, what is that going to do to banks, right? It's not going to be very desirable to lend at that point. People are going to, the ones that are running out buying homes now because interest rates are at all-time low, just like they were at all-time low here and here and here and here and here and here, and right? You see what I'm saying? Uh, yeah. But this right now does not signal inflation. Okay, let me see it on. I'll see it right now. One second. While I'm reading it, let me go back to Nasdaq so everybody else can see it. All right, coming back down. Powell shouldn't be saying something. Ooh, it's a long question. Gold is not a solution. I'll just comment on that, and then I'll give you the more complete answer. Okay. So basically, what it's saying is, what would happen if the dollar collapsed 35%? We can test that. Shit, where am I? All over the place. This is breaking down, by the way. This is breaking down, but be careful with this one before I answer the question. When you have failed break, from failed moves comes fast moves. A break at the top is going to lead to a break at the bottom. Okay, so right now this looks more like a flat in here. Okay, it doesn't mean the whole structure is going to fall apart. Although if it does, it's going to be short-lived. All right, nothing that I would trade here right now. If anything, probably to the long side. All right, so let's look at the dollar. Would it be beneficial if the dollar collapsed 35%? That's basically what the guy is saying. What the hell is it? The dollar collapsed 40% from the highs in 2002. Okay, and if we go a little bit closer, from 2005, 23%. Now, what if the speed at which something falls apart, the speed at something falls apart. So if he's saying 35%, and I have to kind of move things around, we're taking it to 60. That's going to be beneficial for the U.S. economy? No, it won't be. And the reason it won't be is because, unlike other nations, we are more in debt, and we are much more of a consumer-driven economy. And if the dollar starts to fall apart, interest rates will rise. You would cut off credit to the economy. Let me bring that up. Uh, Shit, I don't have it here. Here's a delinquency rate. It started to pop in Q1. It's actually higher, and I think I have that on my. Let's see if I can find it here. Somewhere here. Anyway, delinquency rates are starting to rise already. So if you were to cut off credit, then you're going to shrink the money supply because interest rates will rise. Housing would definitely come down in price. And as the housing comes down in price, then what happens to inflation? 42% of CPI is housing. So then you're going to start to depress CPI. And then you've already printed too much. They're selling bonds, and the government is going to do what? Issue more debt, right? Well, if nobody wants your debt to begin with, if you issue more debt, then you're just going to make things worse. So when we say that, well, there's a benefit to devaluing the dollar in by 35% because we're going to be cheaper, and then that's going to attract, um, you know, uh, businesses and repatriation of money and all this stuff. Uh, this is this is too simple, I think. What he's saying, this guy on FT, uh, it doesn't work like that. You know, where the hell is it? And again, if you haven't subscribed here, you should, because you should take a look at the. Here it is. So this is the delinquency. It was falling, falling, falling. Now it's starting to pop again. But this is not the particular one that I was looking for. There was another one. Anyway, I can't find it now. But anyway, delinquency is nowhere near where it was in 2008 yet. Yet we don't know how high it's going to go, but uh, but it's it's gradually moving in that direction. I can't find it anyway. Yeah, so it's gradually moving in that direction. Oops, what happened? What happened over here? There we go. Right. So yeah, so I don't think the dollar falling rapidly. Okay, over the course of time, it won't create a shock to the system. And in an orderly fashion, then kind of like we saw back here, the economy adjusts. It adjusts over time, and it's not a shock, right? Remember when they were telling you that, oh, when oil goes down, well, there's going to be more discretionary income, and everybody's going to go out and spend it, and the economy's going to boom, right? How did that work? Not very good, and it came down rapidly, right? That the petrodollar, the petrodollar. Everything is a conspiracy. It's a petrodollar. So, yeah, I think this guy, he's smoking a little too much weed. Yeah, that's right, Uche. The whole economy would suffer. Um, it's not the way you want to fix things by devaluing the dollar. Absolutely not. At least not rapidly. All right. Yeah, we're driving. Yeah, well, we're running in the dark at full speed towards a cliff. That's for sure. Yeah. We still have a lot of national wealth, believe it or not. I mean, we're a very, very, very wealthy nation. Okay. Um, and that's what MMT is exploiting. MMT is exploiting all that wealth and saying, well, don't worry about it. It's okay. Don't worry about it. You can do this. Yeah, keep printing trillions. All right, don't worry about it. Right? They want to liquefy the national assets. That's what they want. They want them in liquid form, right? And they think if they just pump it into the productive economy and keep pumping into the productive economy, that's all that matters. They don't look at the other side, right? Private sector too, who keeps receiving those dollars constantly, right? And pushing up asset prices. They don't look at that part. They don't talk about that part because there's no sectoral balances within the productive economy in MMT. They only see the net effect. That's it. They don't distinguish who gets those dollars. And that's their problem, among many others. And if you can't produce economic growth by printing $4.234 trillion in basically 5 months, well, fuck. How much do you need, bro? You can't print value for a currency. You can't force people to work and produce and be efficient and innovate. It doesn't work like that. Don't get me started. Fangs. Oh, where are they? Da, 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 da. I magically lost them. There it is. Yep, coming down towards the bottom. You may have, Mark, you may have drawn yours a little bit different than mine. You may have something like this. So that's why you think it's coming to the bottom. I went from the bottom here. So it has a little bit ways to go. Because, you know, this is a full move up and a full move down. So this is a wave two here. Right? That's the count right there. And that's why I took the bottom 2 points here. Even though they're kind of close together, it's a full move up and down. It is log. This is not log, and this is log. It's the same. Yeah, so if you went to a gold standard, like the guy was saying, what are you going to value 1 ounce of gold? $100,000? I mean, we have what, 350% of GDP in debt, private debt. You have another 132 public. So I mean, I don't. How do you go back to a gold standard? What do you do? Does it make sense, James? Not what I'm looking for. Mm, Not what I'm looking for either. Anyway, I'll find that. I'll have it ready maybe later on today. I'll get a drawing tool. All right. Nasdaq now breaking down. S&P is Still within the rising F flag. Dow Jones is still up 0.5%. Google or the FANGs are down 1.75%. Transportation is still up. And what's the Russell doing? Russell's going even higher. Nice. Very nice. Talk about a confused market, huh? Very confused market. How much money is invested from foreign investors? Good question. Well, there's the only one that I can factually tell you what it is 7 trillion um, that own the bonds. Let me see if I can find it. Where the hell do I have that? And by the way, today I'm not doing any trading. I'm just letting it do it whatever it's got to do. This is not something that makes any sense charting wise, especially when Powell's talking. Lately, every time that guy talks, the market goes down. They should shut him up for Trump's sake. Where the hell do I have it? Where the fuck do I have it? Right, sorry. Right, there it is, right here. This is foreign holders of treasury securities, 7.1 trillion. Okay. Now these are also the reserves for other nations. So remember that, um, and I don't think I talked too much about this in the building the economy from scratch, but when you're exporting, I'm sorry, when you're importing or exporting dollars, and then those dollars don't physically leave the United States. right? They stay at the central bank. Um, they stay with the central bank uh, in an account. And the same thing goes with, yuan that is owned by Americans, right? Those yuans stay in the Chinese central bank. They're not physically flying around. And they have an option either to invest it in savings, which is a bond, or keep them in reserves, which is like a checking account, right? You get no interest or very low interest. And that's why you will see that China, over the course of time, has reduced their dollar holdings in bonds. They still exist, okay, in reserves, but they add and subtract as they see fit. Um, so, from that standpoint in bonds, we can factually say it's $7.1 trillion. Now, how much comes from, you know, buying stocks and so forth? That I cannot answer. I'll look into it, but I can't answer that factually. One second, somebody's messaging me. I'll be right back.
Mic off. Mic on.
1 second, guys. I'll be right back. But anyway, you can see the S&P 500 is not following the Nasdaq. Right? Broke down, popping back up. Breaks the top, breaks the bottom, blah, blah, blah. I'll be right back.
Mic off. Mic on.
All right, I'm back. All right, quickly. I saw somebody trying to do this. You can't do that. And this is based on this. You can't do that. You got to wait for the hook. So you have one assumption, then two assumptions. Yes, it looks appealing to the eye, for sure, but that's not how waves are measured or counted or anything like that. If this were to be true, then you have to wait for the hook. And the hook in this one would have to be somewhere down here, right? About 11,000. We're nowhere near that. So you have two assumptions back to back. That's dangerous to do. Um, so that's my thoughts on that one. Um, Now we do have a structure below a structure. So the likelihood of the structure, remember, the structure points one way, does the other. Right? If it goes up, then it's going to go down. Do the opposite, right? Just like this one goes up. The structure is going up, and then it came down. Then you had a structure below a structure. So yes, there's a likelihood that this is going to correct at some point, for sure. But to say that it's going to happen now when the rest of the market is soaring higher, I don't know. As the small caps are 1600 right now. I mean, it's just torn up, torn to the upside, right? Uh, Oops, wrong one. Now it's going up against the previous high. Okay, so there should be some kind of pause at the very least, if not a small pullback, if not a bigger pullback. But for now, uh, it's coming up to a potential area of reversal. Dow Jones broke out. Okay, clearly it's broken down from this structure here. Right, rising wedge points one way. Right, does the opposite. Okay, but now it's broken to the upside. How high does this go? Nobody knows. You can never know when a wave is going to end. Is it also coming up to a potential area of reversal? Yes, right up here. Still has a little bit more to go, but it is coming up to a potential area of reversal. NYSC still has a way to go. And VIX doing nothing. Equal weighted S&P looking good. Taking a look at the S&P, just rising a flag. Right. Now remember, we talked about this earlier today. The first count is the first counter trend move, 2, and we were looking for a 3, right? Now we can say this is, the B is valid, right? It's valid, it's hooked. And likelihood is we'll probably see it come to the bottom of this trend line. And the bottom trend line is not confirmed, by the way. This is not an anchor point. This is the anchor point. Wherever this ends, okay, then could look like this, uh, and it starts pushing back up, then we can anchor this to wave 3, wherever wave 3 ends. Okay, this is just to um, for aesthetic purposes. Fangs coming into support. Now down almost 2%, 1.86. Okay, that's why the market is, the leaders are not doing as well, and then the rest of the market is kicking ass. Go figure. Transportation, you know, stuck up here now, so it doesn't look like it's falling apart. Something that always, I want to say pisses me off, but price is just advertisement. It's just, it goes up and down, and it advertises something, and then buyers and sellers come in. It's not value. I know that when you're in a trade, if you're making money, it's value, obviously, right? Your account is going up, and then if it's going against you, you're losing money, right? So in that sense, yes, it's value once you're trading. But the reality of the situation, it's not it's not value, right? So when you look at something like this, and now go out into a daily, right? Value, the value area would be somewhere down at 2,887. This is the point of control. And what you'll see is, right in here is where the most amount of trades went off. A lot of people like this area. When you see the price rise the way it does, and it starts to dwindle and dwindle in volume, well, it needs time to correct. Doesn't mean it can't go higher. It's not what I'm saying here. But it cannot continue going higher and people chasing and chasing. At some point, the law of diminishing returns is going to kick in, and then you're going to get the correction. Okay. Um, Again, it doesn't mean it's not going to go higher. It just needs time to correct. It needs, for the market to figure out where price is, I guess, fair value, if you want to use that term, whatever. Like here, fair value was 28.81, right? Um, you look at the bigger structure, right? We're in euphoria land. Why were we in euphoria land? Because the most amount of trades went off here. It took off. The economy was not really improving. Earnings per share was not really improving. Corporate profits were not really improving. And we were at 3.4% unemployment. Okay. So there's a disconnect there. There's something wrong, especially when car sales started to, um, dissipate. Okay. Um, the amount of people coming into the labor force was not as healthy as it was before, right? The capacity utilization starts to, you know, retail sales are like, you know, in terms of growth. So you're not going to get a whole lot more economic growth out of the economy at 3.4% unemployment. And that's why the tax cuts were fucked up. Because they're like, yeah, it's going to be like rocket fuel. Well, how? You don't have any more people to work, you know? So how are you going to increase GDP? It's not possible. So remember, price is advertisement, right? All right. S&P continues to drop. Let's go back to Nasdaq. All right. All right. Failed moves comes fast moves. The structure was pointing up. We thought we were going to get a little bit more upside. Didn't happen. Broke down. And we're going to see a snapback here soon. Okay, there's going to be some kind of snapback. I'm not saying it's going to be that high, but it's going to snap back. Let's go back. Let's go down to a 1 minute chart. Because somebody was asking, does technical analysis really work? No, we're all idiots and we just do it for fun. Right, 1, 2, 3 down. Now remember, a C wave can be just one tick below. Right, it doesn't have to be symmetrical to the first wave down. Right, so we have a 1, 2, 3 down. The top two are confirmed. Right, so something that would be bullish would be a break of this trend line, and we would look for some kind of move up. And then how it forms is going to be how we're going to figure out what this thing is doing. Right now, we don't have the data. The only data we have is that we're in a wave 3 down, and the likelihood is that once it breaks this trend line down, you're going to get a snapback. Okay, and that's advertisement. So if we were to use this, okay, this is where 70% of all trades that went off from 12 o'clock yesterday. This is the point of control, which is about 11,439. And the other point of control other than this one, the next peak, right? The next peak is somewhere down at 1340. Okay. So we have this void right in here where not a lot of trades went off. Okay. So how deep does it go into the next um, peak? I don't know. Nobody can know that. But somewhere down here, if not here, it's going to start to bounce. And it's going to be like a magnet. It's going to be drawn back up. But again, do you really need the volume profile on this one? No. You can't see that price went off mostly here, right? So you know the point of control is here. You can't see that there was consolidation here, right? So let's see how it's performing on the 65. It's still above it. Not 65, 63. 63 is the last 3 months of trading. It's the average. So we're still way above it. So the bias is to the upside for now. All right. So that's enough of a hook. So we're going to count it. 1, 2, 3. Valid structure. And again, this is only a minute chart. It's a valid structure. So now, so long as it remains within the structure, it's bearish. Once it breaks out, then it's bullish, right? Oh, the markets are going to go up, James. Yeah, they have to because remember they're going to front run it a little bit, but all those dollars that are going to be printed, right, from the government, they're going to be funneled through the productive economy, household income to savings, profit savings into stock market, right? Especially now, there's not a whole hell of a lot of investment coming back into the productive economy. So the vast majority of those dollars are going to go to the asset prices, right? And they'll reflect it ahead of time. The moment people start to spend their money and it ends up as profit savings, then it's going to reflect in the stock market. But again, the market is going to front run it. And that's the part that kind of got me um, in in the recent sell-off, the recent bounce, I should say, here. That they started to give all these programs and deficits uh, March 16th on, I think, or something like that. I didn't know how fast I was going to be reflected in the market. So that kind of caught me off guard, to be honest with you. Now, here's the deal that when you're in the first 50% of a stimulus, it's not going to be the same as the last 50% of the stimulus. So if we're projecting that this is probably in the second half of the stimulus, that maybe we'll get another one after this one, maybe a little bit more. How is that going to translate into the asset prices? Probably not as bullish here as it's going to be here. Okay, so that's something to consider. There we go. Does that make sense, James? All right, there's a breakout. There it is. Yeah, the fund managers, remember, those dollars are going to end up in savings, right? And then when they end up in savings, they're not going to put them underneath the mattress. They're going to give it to money managers. And then the money managers have to do what? They have to go out and invest it, right? So once they invest it, um, they're net buyers and not net sellers. So it's the mechanics of trading. You understand? Um, Early on, they're willing to buy it at a higher price because it's still undervalued relative to the amount of dollars that it's going to come in from stimulus. So you'll get more of a thrusty kind of move up, right? Something like let me go out. Right. So first you get this kind of movement, and then it shallows out, right? So here you don't care what price you buy it. Here you care a little bit more how much you buy it, and here, it's not a whole hell of a lot of a pullback. Plus, if you're not expecting more stimulus um, in the way that you were expecting it back here, you're going to be a little bit more cautious on the upside as to what price you buy. All right. Here are the small caps. They've been leading the day the last 2 days. Okay. Starting to fall back. S&P bounced. Okay, but it's still in the rising F flag. And again, the bottom, this is not valid. Please do not forget that. Maybe I should take it for now because I don't want anybody to get confused. And there you go. Like clockwork, right? You got the 1, 2, 3 down. You got the pop, right? Got the pop. Had some consolidation in here and then continued higher. Now we're testing the previous high. Potential area of pause or reversal. But again, you see the structure is pointing one way and price does the opposite. Okay. I've been showing you this now for 2 days. So these are the head fakes of the market and why people get all confused a lot of times. And that's why you shouldn't flip flop. I'm long, I'm short, I'm long, I'm short, I'm short, because eventually you're gonna get screwed, right? If you're short here, right, and then it starts to pop, and you're like, oh, this is bullish, and then you go out and you buy it here, then it comes right back down, new low, you sell here, right? You short, goes up. You see how it head fakes you? If you don't understand the structure, if you don't understand this whole structure, you're never going to see this potentially coming. You won't. You're going to get caught. So that's why I have a rule: trade wave 1 and 3. Forget about 2. You try to catch 2, you're going to get screwed. And even though I'm telling you this, I still trade 2s knowingly or unknowingly, and I screw myself. It's difficult. It's difficult not to trade it. And believe me, if you want to be a better trader, you got to be able and willing to miss out on trades. Because if you're like, oh, I knew that was going to happen. If you start behaving like that and you're trying to trade every single wave, you're going to blow out your account 100%. 100%. I got the shirt, believe me. Look at that. Huh? Perfect. Perfect. Right to the previous high. And the fangs right to that support area and pauses. So what do you see here now? Right? This formation. Next move should be up according to this. But the structure overall is bearish, right? It's pointing one way. Eventually it's going to do this. But within the structure, you have a bull wedgie looking thing that should resolve to the upside, at least to the previous high, and then we'll see what happens. The S&P still doesn't show recovery. It's testing it, but it's not showing a recovery. Nasdaq is, but the Nasdaq had a bigger, nastier fall. So if the S&P is not showing a recovery, then I would question this rally. All right, another rule. You don't know when a wave is going to end, and it could end just prior, at, or just above, okay, the previous high. Another point. You see how tight this is? Tight, 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 tight. Right? See it? Anytime you start getting a tight, 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 you're going to get this. You're going to get a large move, fast move in the opposite direction. You can kind of see it here. Tight, 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 boom. It doesn't mean that it's the end of the move by any means, but you will get a snap, right out of it. Just like here, you could get a break fast, but then it can continue higher, right? It can do many things. It can go straight down. It can do whatever it wants. But for now, right now, I don't see any good risk rewards for now. So I can chart them out, but I'm not taking any of the trades. And if I do, I don't post them here. I'll do it for subscribers. James, also, when you say missed it, it's not, you didn't miss it. You shouldn't think of it like that. Because if you missed it, it means that it's not going to retrace. And I don't think that's the case. At least that's not what the chart is showing you, right? Um, Let me show you something here. We lost 14% in the Nasdaq in just about a week or so, right? 2 weeks. And we went all the way back to July 6th. Okay. So if you felt like you were missing out on this, you didn't miss out because you could have bought here, right? Um, I don't think this is going to be the low on the retracement. And the reason I don't think that is, again, the market needs to correct, right? You see it, volume tapering off. Again, it's not that it can't go higher. It will. It's going to go higher, but you can't just forever go up. You need to come back. You need to fill these uh, areas with more volume. Let the market figure out where the point of control, where fair value is, and then it can continue to push higher. Okay. So if you could go, oops, I don't know where this was. Uh, Probably here. So you see something like this now, right? This is more filled in. This is more of a, you know, a normal market, I would call it. And that's why I don't use these things, right? You have multiple peaks here. It's just kind of consolidating of what's going on, right? Um, Eventually we came back down, right? We tested this area again and went through it and then came back above it and pushed higher. But again, you can see that there are these value areas. Okay, then they're not as anemic as they are up here. These were very anemic here. So move this. So what has happened since? It's gotten more and more anemic, right? Got a big old gap right in here. Look at that. Nobody liked trading in here. So you could easily see one more down, and then that would make a 1, 2, 3 down. Okay, you don't know how deep it's going to be, and then guess what? You're going to be right back to February 2020, all-time highs. So did you miss it? If you buy then, no, you didn't miss it. Remember, price is advertisement. It's not. It's not value. You got to be willing to miss it sometimes. But people are going to be like, "Oh, you missed it. You missed it." Yeah, because you don't understand how markets move. I didn't miss anything, brother. All right, so we're just above the previous high. We're building a consolidation. It's a tight, tight, tight. Okay. Resolution probably is going to be down. Okay. Because this price movement has to correct at some point. Right? And this is just as good of a point than any other. Any other questions? is starting to break down. We're expecting a rapid move down. Okay. It doesn't feel right to me. That's why I'm not trading right now. I don't like the risk rewards right now. It's just it's in a sideways market. Um, just backfilling, correcting, waiting. It's just the Fed is talking. It doesn't the charts don't look right to me. The bias is still to the upside, just for everybody to know. My bias. See, it's starting to break out in the S&P within this structure. Okay. Um, NYSE, it's still doing okay, right? And again, this is a very small time frame. It's only a minute, so don't forget that. All right. Still rising, rising at flag. Dow Jones correcting. Okay. That's a bullish formation to the upside. Um, yeah. See, it broke. It did what it was supposed to do, and then curved back up. Okay. So this, I'm not. I don't want to go short at this time, and I don't want to go long either because it's in a corrective phase right now. So this should have collapsed. It didn't. It's now correcting through time, and that's bullish, right? Because nobody wants to sell it. Right? Made one attempt, and boom, it was bought right back up. So now we're breaking out. So again, the bias is to the upside. All right. By the way, this will correct at some point, just so we're clear. This is going to correct. Not this low, but it's going to correct from wherever it turns. This could actually be a wave 2 of 3. So how does wave 2 of 3 works? Well, you will get the 1, the 2, and then you're going to get a 3 that really starts to fall apart. But you would have to see that in the rest of the market, which we don't see right now. That's why you gotta always listen to the message of the market. Stop guessing what it's gonna do. Investing, trading is not about guessing. Guessing is for degenerate gamblers. And it's this, and it's because of that, and it, nope. nope, nope, nope. Buffett didn't get to where he got because he was guessing better than everybody else. It's you can't think like that. But it's very hard to train the mind, right? You come up with stories. You lie to yourself. Well, it's going up because of this, and it's going down because of that, and this is the story, and this is what, and I was reading this article, and this guy said this. Forget that shit. Let the data tell you what is going on. Don't tell the data what is going on. Have a firm understanding of the macroeconomics, money flows, and so forth. Sure, have a good understanding what's going on with the economy. Um, and up till recently, I completely disregarded politics. Completely. I don't understand it. It's not my thing. But unfortunately, with this clown, uh, you can't help it, man. If you don't take him into account, you're fucked. Well, the markets are not crap. It's the manipulation that's crap. Markets want to do what they want to do. They want to find, discover price. That's what they want to do. But when there's always constant intervention, and then that's gonna affect the price, right? And that's the problem. You don't allow the market to correct itself. You don't let it do its thing. They'll figure it out. But no, we have to have QE. We have to have deficits. And then afterwards, they're going to tell you, yeah, the economy recovered because we deficit spend in QE. Yeah, right. My ass. It's got nothing to do with it. Economies recover on their own. Oh, look at the data. It's going back up. Yeah, we unlocked. So, of course, people are going to go back to work. Yeah, but it's improving. It's supposed to improve. You see, they put the cart ahead of the horse. It's frustrating. But do you think that we're going to go back to January 2020 levels anytime soon? No, of course not. We got flu season coming up, right? What's that going to do to the saturation of hospitals? I mean, it's not it's not the way they present it. It's all marketing. And again, don't say I'm against deficits and I'm a gold bug. Absolutely not. Of course, we should deficit spend. Of course, we should support um, the the average Joe in the street for sure, for sure, absolutely. Even small businesses, I don't have a problem with. But you start bailing out American Airlines that bought back, $7 trillion, whatever they, I think it was more, 12, something in the last 5 years. Did I say trillion? $12 billion, and now the shit hits the fan. Oh, by the way, give me another, 5.2 billion. Fuck you. No, go get it from the guys you bought back stock from. Go issue stock. See what happens to your price, right? But it's a facade. They trick you, right? Because they're going to use, well, we don't want to fire people. We don't want to fire people. Well, you don't have to fire people. Just go bankrupt, screw the investors, see if they do that again. Well, no, we want confidence. We want confidence. Yeah, but confidence is backstopping risk. If you backstop risks, then what? Right? And that's where Taleb is right. You gotta have skin in the game. If you have no skin in the game, you don't know what you're talking about. All right. There's something called a break test go. And what's a break test go? Well, it breaks the structure pops back up, it tests the bottom of the structure, and then resolves itself to the downside. Okay, that's a break test go. And again, this could very well be a wave 2 up. So this would be a 1, this would be a 2, and then you would see the 3. And it's 12:30 right now, so I don't think it's going to happen anytime soon. But going into the close, you could see price fall apart. If this is a break test go, which right now it's challenging. Let me put the points correctly. Oh, it's back in structure actually. All right. Let me clean stuff up here. Delinquencies um, on housing. It's such a weird. Again, real estate is fucking weird. You have a group of people who are running out buying because interest rates are at all-time highs. They're refinancing, and then you have another group of people who are delinquent on, you know, their loans, and it's such a complete disconnect, one from the other, right? Uh, Now, banks are offering you not to pay for 3 months, right? Uh, it's a it's a very weird dynamic, to be honest with you. They shouldn't be rising because of that. I don't know why they are rising, but they shouldn't, unless we are talking about the middle class, because you can stimulate them with $600, but if their cost of living is, $10,000, you're not going to help them, right? I got a couple of friends, $1 million companies, and they're losing their ass. They're losing millions of dollars in revenue. So I don't know. I think it's more the middle class, middle upper class that is might be having some difficulties. And when I say upper, I mean the lower upper class, not the upper class. Mid, the high end of medium. How about that? But again, banks they're allowing you to defer payment. So imagine if they weren't. Imagine if they weren't lending you defer. What would happen in delinquency then? Oof, oof. All right, out of curiosity, I want to see where the point of control is for today. Point of control is 11,470. It's all the way up here. Right? And again, look at the way the price peaks are. Very close together, right? Very close together. It's just going back and forth between the value areas. That's it. It's not doing anything spectacular. It's not like, this is tapering off, right? So And again, this is just for today's trading. If this is correct, 1, 2, 3 down, and this becomes a rising wedge, and this could be setting up for another down move. VIX doing nothing. Yeah, well, nobody wants to be selling homes right now. Um, that's why inventory is low. You know, you don't want to start making big moves unless you had the cash, unless you were a renter and you were saving up and waiting for an opportunity, and you still have a job. Especially if you're in the healthcare industry, right? You see lower interest rates. You're a renter now. You want to buy. You see interest rates low. You're gonna run out and buy, right? But the vast majority of the people, they don't want to sell and then go look for another home, um, or buy a bigger home. So again, to me, real estate is, it's so unique and specific to areas, very specific to areas. Are you from Boston, James? Boston. Yeah.
Mic off. Mic on.
Every leader has gone full retard in spending. Uh, uh, Austerity, you can forget. Austerity now is going to be defined as I didn't print $5 trillion or 25% of GDP. I printed 15% of GDP. Uh, it's not going to be, forget austerity. You go austerity, everything collapses. It's going to be game over. Eh, no. All right. Let's take a look at this real quick. Concerning developments in U.S. labor markets is the recent weakness in prime age 25-54 labor force participation, especially among women. Second chart. Again, right? If you were to chart this, what are you going to see, right? You're going to see a 1, 2, 3 down. Um, Definitely the labor force participation has fallen off, and the latest data that just came out showing that it's starting to fall off again. And again, remember, prime age participation is supposed to be kicking ass all over the place. Um, Again, the population of the millennials, they're moving into that, 30 something demographics where they're the biggest part of the population at peak. And they should be spending like drunken sailors, right? Which should boost economic growth. And it's not happening. It's not happening. And when you're seeing that labor force participation from 84 all the way down to 81, 8.5, whatever it is, you know, or it's not, this is not good. And that was the problem from the beginning, right? You got the number one, two, three, four economies in the world shutting down in the global economy. You're not going to be able to recover from this anytime soon. It's not like the flu is going to go away because it's a liberal hoax or the warm weather is going to make it go away by magic. Um, and structurally, you're going to start to damage the economy the longer this lasts. And it's not just going to go away. So it's going to last. And everybody was pointing to, oh, look, everything is improving to the isolators. But nothing was improving, right? So, I don't know. Incubator economists, they're special people to me. They're really special. They think the price of the stock market is the economy. Bullshit. And the worst part about it is that they're going to pat themselves on the back like, good thing we stimulated when we did. Yeah, right. Let's look at the 10-year real quick. Where is it? Testing previous high. 0.77. Uh, Still rising on the spreads and the twos and the tens. I do tens and twos because when it rises, it shows me a higher um, that it's rising. The spread is rising. That's why I do 10 twos instead of two tens. In case you're wondering. Aggregate bonds continue to sell off. Junk bonds. Junk bonds, what the government is buying. Yay! Go bail them out. Back into structure. Look how fast junk bonds dropped before the announcement that the Fed was going to buy. Look at that. This is the kind of snap moment shit that I'm talking about, right? That's the kind of stuff I'm talking about. Only when it does snap, there's not going to be no bounce. Not going to be a bounce, believe me. That's something interesting. That hotels are underperforming airlines. I guess that's because of the bailout, uh, but that's interesting, huh? That hotels, because believe me, airlines are way more capital intensive than hotels. trade. Incredibly bullish. Particle market. Look at that big ass megaphone, huh? Big ass megaphone. Remember when I was saying earlier today, it breaks the top, breaks the bottom, right? Well, right back into structure. I'll be right back.
Mic off. Mic on.
Alrighty, I'm back. So consolidation here, this is going to either push up a little bit more and then start to fall apart. But this is a bearish signal, clearly, right? Wedging, slowing down the rate of climb, and this is going to resolve to the downside. And the count would look like this: one, two, three. Okay, so this no longer applies. Again, usually when it's tight, 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 it pushes down. So we'll see how this works out. Now it's 1 o'clock, so for it to start falling madly is a little bit difficult. Um, so we'll see how this goes. Unless Pal says something stupid. Again, for the newcomers, remember when a structure is showing one way, the opposite occurs. Okay, so that's why we find good risk rewards and take the appropriate actions. Right? Nothing is 100%. Not supposed to be. You're supposed to manage risk in the trade. All right, I'll be back.
Mic off. Charging battery. Charging battery. Charging battery. Mic on.
All right, welcome back. I'm back. So what's going on here? We're going higher. Interesting. And this is the type of market that is just waiting, waiting. You had a big bullshit drop. Now you're getting a big pop. Everything was bullish, like we said. The structure, though, on the NDX was bearish. And it's gone into a particle market to the upside because there's no waves in this. There's absolutely no. I mean, the waves that did exist, they didn't work out. So it's not a wave market, right? It's a particle market. So um, it's 207. But again, the price action in the previous couple of days is right back and forth in the same area, right? Uh, so particle market straight up. It is what it is. Let it go. It's up now. It'll be down later. Let's get this out of the way. All right. So weird looking particle market. Uh, if we put the value area on, came back up to value area, it created that consolidation in here, pushed up. Now it's to the top portion of the value area. And I don't want to get too much into structures, but when you get kind of a P kind of formation, um, this typically means that it's just short covering. Okay, it's not necessarily something bullish. And I guess a lot of people that were short, based on Trump being sick and whatever, they're covering their shorts now. Okay. If you move it out more than just a day, let me go out 5 minutes. There we go. All right. There's the P. Remember, this drop was Trump sick. And then, hallelujah, he saved. LBJ saved him. What a quack. Let's see what's going on in the rest of the market. I was looking at it earlier. Pushing up against this structure. Started several times. Okay, remember, failed moves comes fast moves, so it's dangerous if it comes back into structure. For right now, okay, it's holding. And as long as it's holding, that's a high base. So it's a high base, it's building that pressure. And once the pressure is built, then it resolves itself one way or another. So either go incredibly bullish or come back down, breaks the top, breaks the bottom, blah, 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 same as before. New York Stock Exchange continues to push higher. Okay, there's again an expansion of the structure. All right, so that looks good. Dow Jones broke out, tested previous high, pulling back a little bit. Again, high base, right? Let this correct. It's a high base up here. I'll remove that for now. NASDAQ we just did. And look at that. Look at that on small caps. Risk on. Okay. 1, 2, 3 up. This was supposed to be a deeper correction. As you can see, it's a particle move to the upside. The small caps, in addition to their 3% move yesterday, they are getting now another 2.2% move higher. Now, I had this short but I stopped out. It wasn't looking like it was going to do what it was supposed to do, so I removed it. Taking a look at the dollar. Dollar is in this bearish formation. It's a bear flag. Taking a look at the 10-year. And again, this is interesting, and I'll tell you why this is interesting. That let me zoom out. Right, you had that push today. You have the small caps. You have bonds selling off. You have commodities rising. Right? It's that theme of inflation. It's the theme of inflation. I don't see how we're going to get inflation. Uh, Monetary inflation, yes, but it's not going to reflect into the real economy. We were talking about real estate before. Supply has come down about 17%, and prices have risen about 6%, right, year over year in August. But again, it's a very funky kind of matrix because what's going to happen when supply increases next year or when this thing gets done, right? That's going to depress prices. More people that have a job, they're going to want to sell, right? Um, so when interest rates rise, what's going to happen? It's going to depress prices. So, yeah, it is what it is for now. But remember, when the 10-year is rising, that means they're selling off bonds, and that puts puts pressure against stocks. And if you look at the earnings yield on stocks, if I can find it, it's not this one. Where the fuck is it? Oh, here it is. Right. So it's 3.4 for stocks right now, and you can get um, 0.7, 0.77 on bonds. Okay. Now again, it's in a range in here for now. Let me zoom out. Right. It's building that pressure here. It's going to resolve one way or another, but it's in a range. But what if this were to start to rise? Right? And now you can buy a bond that's going to give you, I don't know, 1.5% versus a 3.4 of the stock market. You see what I'm saying? It puts pressure on stocks as interest rates rise. And, you know, if the stock market keeps rising, what happens to the yield? The yield drops, right? So it's a very weird kind of. I think it's just temporary for now. That's the way I'm chalking it off. I don't think it's going to last. Um, I think the market is just anticipating the stimulus. Um, the price action today has been shit, right? It hasn't done anything. Just kind of plus or minus, 0.7% or something like that. It's just garbage trading. It's just nothing, you know, nothing to sink your teeth in, right? Just back and forth and back and forth. It breaks the structures on both sides, goes back up, right? It's just there's nothing here since yesterday uh, at 10 o'clock. We've been pretty much in the same range between the high uh, at the uh, at the close yesterday. Okay, they're just waiting for the stimulus. Well, small caps are not. They're running. They're running, and they broke the previous high. Okay, so now if it's going to reverse at the previous high, this is the time to do it. This is the time you should do it. And again, you can see the particle move, right? Look at that. Straight shot. There's no waves in there. It's just a straight shot, straight up. While the market leaders have done nothing. Nothing. They're stuck. Where is it at? Right. Yeah, remember, so when a bond starts to sell off, because I know a lot of people have difficulties, and I know most of you understand this, but for those who don't, um, when the bond price falls, the yield rises. Okay, and then you compare the yield of the bond to the S&P. It's not PE, it's EP, right? Earnings to price, and that's how you get the yield.
Mic off. Mic on.
Yeah, so Jason is asking, isn't small caps getting bought a bad sign? It's not. I mean, the valuation is stupid, right? It was 93 when it was 10% lower. I don't know what it is today, but um, when small caps are being bought, that means it's risk on. Now, when you have risk on and then you have bonds selling off, even though it's a little bit, right? We don't want to read too much into it. Uh, but, that again, it's the inflation trade. And bonds are going to be sold off if there's not enough investors who are willing to buy it. And that's why you have that FT report, Financial Times, where James was asking what would happen if the dollar sold off 35%, blah, blah, blah. There's this feeling that so much money printing is going to create some kind of inflation. You got the Fed saying we want higher inflation, but when you look at the U.S. in terms of the broad money supply, okay, let me put here changes in the past 12 months. Where is it? U.S. Somewhere here. We're in Kyrgyzstan. Where is the U.S.? Ukraine. There we go. Right here. Okay. We've increased the money supply by 23%. I mean, you got Nigeria above you, and it's actually more because this is back to August. It doesn't even include September numbers. And then you have Kyrgyzstan right below us. I mean, that's embarrassing. We are literally behaving like a third world country. You look at Turkey, right? Look at theirs, 43%. Sudan, 46. Argentina, 77. The Congo, 36%. Peru, 34. Ukraine, 28. Brazil, 28%. Haiti, I mean, come on. you know, we're only 4% below Haiti. Come on. And this is why people are saying, "Oh, there's going to be inflation." It's the same kind of story as before, but I think this time around they have more reason to believe that uh, because we've printed 25% of GDP. It's just insane. So anyway, particle market straight up, just pushing higher. but it's within the context of this whole back and forth, back and forth, back and forth.
Mic off. Mic on.
All right, here's a bigger time frame. Sorry, I'm eating. It's 1 hour, head and shoulders, breaking out. We had the potential of reversing out of this structure, and I said, be careful here. From failed moves comes fast moves, but instead it created a high base, and that high base resulted to more upside. Um, when you look at the overall move, look at that, right? It's very thrusty. It's a very thrusty move to the upside. Broke out, consolidated. Now I'm pushing higher. Right, so uh, this is no longer valid. Okay, continues to push higher, and we're now going towards that M pattern, right? That M pattern, and then we're going to look for the move lower. But again, we got a long way to go before the M pattern starts to form. A long way to go.
Mic off. Mic on.
All right. So we're moving away from this right shoulder now, breaking out of the neckline, pushing higher. We did our little consolidation right in here. Okay, so we need to see this continue to push through. But again, it's 226. No trade deal has been a trade deal. uh, no stimulus bill has been uh, agreed upon, so the market is slowly creeping higher.
Mic off. Mic on.
And this is the pure definition of fuckery, right? When you get a big sell off, big pop, it's just back and forth. Designed to confuse people. It's designed, when you have a fast move down and a fast move up, it's designed to provoke emotions. And that's why praise is advertisement, it's marketing. That's all it is. Has nothing to do with value.
Mic off. Mic on.
All right, continues to push higher. And you see how the value area, right? This is the value area. It's pushing right above it, right in here. By the way, this is value area is 70% of all trades, right? Wherever they went off, that's the value area. Standard deviation, bell curve, blah blah.
Mic off. Mic on.
All right. Let me show you something. Where is it? Mm, all right. Look at this. You see this chart here? Right. You see how the velocity of circulation to GDP divided by M2. This is the increased money supply, right? So we should see an increase of economic growth, not a decrease. And this is again, the problem with printing money and saying, well, we're stimulating. Well, you're not stimulating shit because the economy is not growing relative to the money supply. You need to see a positive one in GDP, right? Not not falling. And you know, they're going to take credit in the end. And who's going to sit here and be like, that's bullshit, and throw the bullshit flag? Nobody, because nobody understands these things. It's the only thing that it's stimulating is the stock market, not the real economy. Oh, Nick, you're negative. I'm not negative. I'm telling you how it is. You don't like it, change the data. I got nothing to do with the data. All right, taking a look at the fangs here. They're red, mostly red except for Nvidia, and you know, market is flat for the day in NDX, and the S&P is up 0.67%. Nasdaq is 0.2%, and the real winner today is small caps, 2.55%. Which again, that 2% is that upper limit of the daily rise, right? And the low for that matter. And again, you can see how it's a particle market, right? There's no waves, there's no nothing. It just keeps rising and rising and rising. Yes. Yes, James, it's at resistance. James is saying that on his chart that um, Nasdaq is at resistance. Yes, that's true. And when you look at it here, right, you had once, twice. This is the third time that it's pushing up against it. This line is no longer valid, right? It was a failed move. That came with a fast move in the opposite direction, and then you got a pump back up, and then when you put the VPR on, right, and this goes about 2 days worth of trades, the volume, okay, you're at the top of the value area, more or less, all right. So this should act as resistance, yes. But again, it's just a back and forth, right in between here. Nothing has really changed. Nothing has really changed. S&P is different though, and that's why yesterday I was saying I want to focus on the S&P because it's really taken off. Okay, it's really taken. It went to the point of control, created some more uh, consolidation, and then it just took off. And again, to look at it in the proper perspective, okay, when price breaks, you want that pressure to build and then push higher. That's exactly what it did, right? This is textbook breakout of the head and shoulders, textbook. So how high can we go? And as the arrow shows, to the next uh, point of control, which is all the way up to 3505. Again, it's not going to do it in a day. It's not going to do it in a straight shot. It could, but that's not likely. So you're right for NDX, James. Okay, it's up against this resistance. A push through here, um, again, is going to push everything through. And this one also now is a head and shoulders. Okay, see it? And it tested it once, twice, 3 times, 4 times. So this is a baby little test in the grand scheme of things.
Mic off. Mic on.
Boom. There it goes. Yeah, baby. Go, 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 go. And that's what we said yesterday, that it's probably going to come up here, and then when it does, it's going to push higher. And if you can't get in, you got to get in, right? All right, so let's see what is really pushing the markets higher. And if you look at the 5-day average, what is leading is utilities, financials, real estate, materials. Okay, these are not the market leaders. So you're seeing that money now is flowing into um, laggers and not so much in the leaders. Information technology is all the way at the bottom at 1.75%. Okay, so that's very interesting. And if you look at today, what's today? Same. Utilities, financials, materials, energy, industrials. Okay. We didn't talk about oil today. Let's take a look at it real quick. Oil. There's oil. Right? 40, 75. And we were on October 2nd, 4 days ago, we were all the way down to 36.62. Huge move, right? Huge move. So if you guys would have followed this trade, fuck, up 11.5%. That's huge. So people are going with this inflation trade at least for now. We don't know how long it lasts, but for now, that's what they're doing. Utilities is not really a market leader, right? Uh, that's when you put your money somewhere where you fear the market is going to go down, and utilities will go down less than the rest of the market. So it's interesting that it's leading. I keep looking at the fangs, and they're still in that little bullish flag wedgie looking thing within the bear flag. So interesting. All right. So where can we expect resistance? Ooh, it's got a ways to go. Look at that. Something must have been announced. Don't know what. You guys see any news anywhere? So we still got an hour and 15 minutes to go. We can really, you know, take off here. Really take off. Look at that sell-off. Hmm. I wonder why, right? I wonder why. Well, let's do it appropriately. There it is. This is now the new point of control. Just align this properly because you want to measure the last 2 days, right? You want to measure this move. Where's the point of control? And it used to be down here. Now it popped all the way up here. So big sell off. Big sell off. You're right in the morning, wrong in the afternoon. Look at that. And even wronger by the close. All right, so now we extended the range of the day in the value areas. We created a new point of control, created a bigger structure that's a channel, and then failed. Right? And again, you know, this is fuckery, the pure definition of fuckery. You get a false breakout, and from failed moves comes fast moves in the opposite direction, and now it's breaking this channel. Oof. Good luck trading this shit, right? And that's the problem with markets that are not supposed to be where they are. That you're going to get volatility, and volatility is occurs at turning points. Look at that. Ugly. Very ugly. Very ugly. Now remember, because we took it off, right? Here's where the fuckery move started. Oops. This is where it went, and here's what happened. Now go trade that shit. Good luck. This was a tight, tight, tight. It did not occur here. It did not occur. Oops. Here. These are all tight, tight, tights, right? Tight, tight, and bang. Straight down. Might take a while, but it works. And then this one really seemed like it was going to fall apart. And just for the record, for you guys who are not subscribers, I did take the short here. Okay. I'm up now 975, and I'm not kidding you. I'm not kidding you that I was literally seconds away from stopping out here. Seconds. Seconds. And now you have the whole entire structure breaking. Not only is it breaking, but it's coming back into the head and shoulders, back in the neckline. Okay. Back in the neckline. All right, I'll be right back.
Mic off. Mic on.
If anybody can figure out what the news is, it will be great. And again, I don't necessarily sit there and read the news all day long. He said this, she said that, blah, blah, blah. So the big problem here on a small time frame, always, right? Don't confuse small time frames with big time frames. Is that you had your 1, 2, 3 here. You created a structure above a structure that broke the previous high and then failed, right? So this could potentially be a reversal for a while. That doesn't fit. Okay. So let me take out all the other lines so we can see the bigger structure. I'm going to take all this stuff out. All right. There it is. All right. So what do we have now? What are we looking at now? The bigger structure now is a 1, 2, 3 up, and we're likely going to come down here. Let me take out all this noise. Right. So right here is you want to be taking profits here. Doesn't mean that the structure will not fall. Okay. Doesn't mean that it's not going to fall apart. But for now, you want to be taking profits right down here. You'll see a bounce. Let me get rid of this noise and this. And you see how quickly this happens, right? How fast the whole structure changed. Everything. The hook came, bum, 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 one after the other, bum, right? And it came in the last, literally, it dropped in 5 minutes. 5 minutes. So now the whole head and shoulders is in danger. The whole thing, it's in danger now. I'll keep it on a 5 minutes because we can see the entire structure. Right, I'll be back.
Mic off. Mic
Thanks,
on.
Marco. No stimulus bill Trump tweet. Fucking Trump, man. This guy needs to be, shot. Seriously. Now that now they're gonna come. He said shot publicly on YouTube. I'm kidding. Not really, but mm-mm. You cannot have someone manipulating the market in this way. Cannot do it. This is not normal. Not normal. And this has been going on for the whole time he's been president. Just manipulating markets with a single tweet.
Mic off. Mic on.
All right, Trump. I've requested and looking to the future of our country. I have instructed my representatives to stop negotiating until after the election. When immediately after I win, we will pass a majority stimulus bill that focuses on hardworking Americans and small businesses. Blah blah blah. Okay. You think this is fair? Hmm? No, this is not normal. That's not normal.
Mic off. Mic on.
Well, does technical analysis work now? Somebody was asking. It created a bearish structure. There, 1, 2, 3 up, bearish structure. Look at it now. You think it's going to stop down here? It will. It'll pause, and then it will break. Watch. Ideally, what we want is for it to come in here, build pressure, and then drop. All right? That's what we're looking for. By the end of the day, we'll close at the magnet point, is what I call it. This is the magnet. We'll close somewhere down here.
Mic off. Mic on.
You can never trust what Trump says, but you know what that means, right? For airlines, oh, unemployment is they're gonna furlough so many people. It's gonna be ugly as shit.
Mic off. Mic on.
All right, there it goes, going to the magnet. Voila, magic. All right, it'll probably go through and then bounce. Okay, so be ready for that. You're gonna see something like this, and then it's gonna bounce back to the magnet and close there. So oof. Let me fix this a little bit. All right, there it is. The target is met, right? Target is met. And again, a little bit below, and then it's gonna bounce back up by the end of the day. Also, please note, from failed moves come fast moves in the opposite direction. This is a failed move right in here. It did not continue up from the breakout of the head and shoulders neckline. So when it came back into structure, and this is the bigger structure, right? The head and shoulders. What did it do? It collapsed. All right. So you see the why we have these rules, right? Why we have these sayings, because they're true, right? And that's why it's real macro. This is the reality of the situation. This is how shit works. Does it always work this way? No, of course not. If it did, shit, I would be Buffett. But you got to understand value. You got to understand price. It's marketing. You got to understand structure. And again, just want to point out, um, how it went from the top of the value area to the bottom, right? We had the consolidation in here. New point of control. Point of control used to be down here. Popped up, took off, and then collapsed. And then collapsed. All right. moving averages, blah blah blah, this that. Forget about it. Isolators, RSI and the MACD and the garbage. Uh, we just got done talking how it was odd that utilities are leading, materials, financials. These are laggards, isn't it? It's not the market leaders. Well, now look how quickly it makes sense, right? Within minutes, literally within minutes. But technical analysis doesn't work, right? Okay, whatever. Keep telling yourself what you want. Um, yeah. So the market was being defensive. Um, information technology was lagging. We take a look at the fags. I'm interested to see what they're doing. Ooh, look at that. It's breaking. It's breaking. Oh, look at that. A bear flag. Points one way, does the other. Magic. Magic. Right. Let's take a look at NASDAQ. NASDAQ's got big problems because unlike the S&P, the magnet area is all the way up here. That's a very long way up. I don't know if it's going to make it. If we analyze the 1 minute, it's breaking out right now, and it's 312. I don't think this is going to last. So this is the structure. Falling wedge. This is not going to last. Falling wedge. Got real tight in here. Just a relief rally. Uh, this is going to go lower, obviously. It's only a 1 minute, but still. But still. We still have 47 minutes left to go in the trading day. I'll be honest with you. 1% down move is for this kind of news of no stimulus. Well, until after the elections, and he's lagging, right? He's at least in the polls, and he's also lagging in market trading, right? People are betting that Biden is going to win, and that's not a poll. That's the market, right? So you would think the stock market would be down much lower. All right. Expansion of the range. Can this end up being the 1, 2, 3? Yep. I think it has a very good possibility. A very good possibility. DAX. UK, Taiwan right up against resistance. Brazil right back down. Saudi, not much. Oil, not much. I would take profits in oil, by the way. Um, Bitcoin, this thing, man. Seriously, I mean, if it doesn't take off with so much money printing, it doesn't take off with the announcement of Trump getting sick. See, gold at least is at all-time highs. Bitcoin is not. So I don't know what the deal is with Bitcoin. That's not a coin. Gold right back down. Key area. Mm, mm. Of course, if they're not going to print, right, gold's going to sell off. So it's at a key area. Let's see if, if it breaks. Forget about silver. I haven't talked about real estate. Here's real estate real quick. Okay. Bouncing off. Commodities. They're still up. That's interesting. That they held. Hmm. Yeah, they held. Bound, the commodity index ETF did sell off. All right. That makes more sense. But look where it sold off from, huh? Like magic. Again, this is, I don't like this chart. I like the S&P better. Okay, we got about 42 minutes left in the trading session. Digesting, low base, going lower. Going lower. So how much of a drop can we get if this structure breaks? Well, about 4%, about 4.5% if we do it that way. And if we measure this, about 5.5%. Let me do it the other way. About 5%. So if we do get that move, 5% from here, the total amount would be about 7%, which brings us to a new low. It's a very big move. And it's not going to take weeks to do, huh? So the volatility continues. And again, we're seeing that price action is bouncing right where we expected it, right? Right here. It'll go a little bit below and then bounce, right? So that's what's happening. We'll go back to a small time frame. Let's see what's going on with the 10-year. Of course. And what do you see? Coming back into structure. Okay. So look for further downside in New York Stock Exchange Index. Dow. Dow's kind of in a, come on, bear flag, right? So this would be a 1, 2, 3 down, right? 1, 2, 3 down. Poof. Right? You remember this? Testing previous highs, potential area reversal, blah, blah, blah. Look at that. Dude. It literally lost 2.5% in minutes. Minutes. Now, I mean, this is a 5 minute, that's 10 minutes, right? On a 1 minute chart, look at that. 1, 2, 3, 4, 5, 6, 7. In 8 minutes, everything wiped out. Everything wiped out. All right, transportation's back down. Expansion of the flag. And now we have, this is not right. That's right. And now we have 1, 2, 3. Bearish. Okay. 1, 2, 3. And just like that, in 8 minutes, everything changes. Now remember, these are small time frames. The point of the small time frames is to teach you about the bigger structures, right? The bigger time frames, and how waves and structures and risk reward, how it all uh, mingles, right? How it all works together. Then you take the macroeconomic data and the bare knuckle charting, and you contrast the two, and then you you find your best risk rewards and your risk tolerance and so forth. Okay, that's the point of all this. I don't sit here in front of my computer all day long charting 1 minute charts. That's not what I do. Right? I care about the big time frames. Okay, this is the stuff I care about. All right, 326, another 34 minutes in the trading. I wonder how China's going to react tonight. Remember, yesterday we went out thinking that today was going to be a bullish day, right? And that was where we were here somewhere. Mm, that's not right. Yesterday was the fifth. Yeah, right here. So yesterday we said, okay, it's going to be a bullish day. We got the bullish move. We got about almost 0.74%. Okay, and just like that, everything changes. Now we're going to be bearish for tomorrow and the day after. But again, it's magic, right? How it just comes right to the support area and bounces. Magic. Nice bounce. There it is. And again, let's talk a little bit about the incubator economists. And this is where they fool everybody. Because, okay, we're not getting a stimulus. Great. Market sells off. And now there's going to be a lot of people that are going to be laid off, at least from the airlines. There's going to be a lot more damage, but at least from the airlines. And the promise is, well, we'll give you a stimulus after the election and whatever. Well, what about the rest of the world, right? You look at, again, Ukrainian International Airlines. They got no stimulus, right? Cebu Pacific, they got no stimulus. Asia, Japan, they got no stimulus, right? Um, so how do those countries, those economies survive, right? Now, let's take AirAsia in the worst case scenario. AirAsia, Japan went out of business. Well, that's great because that's more flying for airlines like Peach Airlines, um, for Jetstar Japan, for Japan Airlines. You see, so there'll be some expansion there, and they'll be able to hire the people that got laid off, and that's the way it's supposed to work. Investors, they're gonna get hurt. Oh well, next time be more careful. Um, so the the fact now that we're not going to get a stimulus and everybody's like, oh, I'm getting laid off because of the evil Democrats or evil Trump or whatever the case may be, this is not capitalism. It's not the way it's supposed to work. Okay, so you can't be sitting here buying back $12 billion worth of stock in over 5 years, and then as soon as the shit hits the fan, go running out to the government, give me $5.2 billion. Can't do that. That's not the way it's supposed to work. So sometimes when I go quiet, it's I'm talking to subscribers. So don't think I'm not monitoring what's going on. again, price action is going to come right back down to this area here. Okay, it's going to act like a magnet, just like I told you it would bounce here. It's always also going to resolve itself right back down here. Okay. If we chart China, it's broken, huh? That is broken. So yeah, I expect tomorrow morning when China wakes up, they're going to be selling this bitch. Emerging markets, which is mostly China, and I usually don't read too much into this, but I think today I will. Um, Definitely a bear flag, no question about it, but it hasn't broken like China. So, China, the China virus, China, China. Again, surprisingly, the S&P is only down 0.85 right now. But remember, it was up about 1.5%, so the net is about 2.5. Okay. If I were to make a cute story up why Trump did what he just did, it would be because he knows he's losing. He doesn't want to look like a beggar. Democrats are not going to give him shit unless they get it what they want. And in order to save face, as they say in Asia, he said, fuck it, fuck it. And, you know, with whatever 3 weeks left, whatever, 3.5 weeks left in his presidency, uh, he wants to show that he's the strict father figure. Again, it's a cute story. I don't know if you guys saw this, but it's kind of funny. Where is it? For some reason, I'm not getting the full. Mm, eh, it's not working. Naturally, multiple uh, part-time, primary, secondary jobs, they're falling. Obviously, we can't even keep one job. We're gonna have two. All right, there it goes, right back down, right? Magnet, remember? Blue line here. And we have 19 minutes left in the trading session. And as you can see now, we're building a bear flag, right? We always start our count from the first counter trend move. If you don't get the count right, then you're just grabbing crayons and drawing stupid shit. Alright, so this is the bear flag that formed. This is the pole. Alright, now the bear flag is breaking. Alright, so this is a one, two, three. Right, 1, 2, 3. But we're going into the close, so again, I'm going to say it that this bottom trend line is going to act like a magnet. So even if it goes a little bit lower, you're going to see a bounce back up here. All right. I'll leave it on this small 1 minute time frame since we only got about 17 minutes left in the trading day. All right, we're waiting for this to break down into the close. There it goes. Now remember that waves work best when it's trending um, and it's not going sideways, right? Sideways, you're just going to get a lot of noise. There's nothing, it's just prices at fair value, right? So it just kind of fluctuates. It doesn't mean you can't chart out flats, right? 1, 2, 3 flats, but um, trends is what it's best at uh, in terms of wave bare knuckle charting analysis. So there's the break of the flag, and it's coming right back into that structure. I mean that magnet, that trend line. And because the structure looks the way it does, we expect it to break the previous low now into the close. 14 minutes left. And then once it breaks the previous low, then we're going to expect either during trading hours or uh, after hours, it'll slowly drift back up to the magnet. Okay, there we go. See it? It's like magic. Again, if you don't understand the structure, if you're looking at something like this, okay, and you don't know what you're looking at, and you just short like you would short now. You're like, okay, it's shorting. I'm shorting now. It's already too late. It's too late. Because the you should have been shorting up here. It's a bear flag. You don't want to be shorting down here because if it rips up on your face, you're destroyed. At least if you short in here, and it comes back up, well, the damage is not as bad. So anyway, again, bare knuckle charting is about finding the good risk rewards. Okay, what's probable going to happen next? Doesn't always happen, but the likelihood. And again, don't think that I sit here all day long in front of the monitor trading like this. It's not what I do. This is a demonstration because, you know, bare knuckle charting is basically fractals, right? It just repeats over and over and over and over and over. So that's what you're analyzing. You can do it on a 5-second chart, you can do it on a monthly chart. It all works out the same. But you gotta train your eyes to learn how to understand value, how to understand structure, right? How to compare stocks with macroeconomics and figure out where value is.
Mic off. Mic on.
Again, um, just like previous highs, previous lows matter as well, right? So we're testing this previous low. I still think we're going to break through it and then bounce, but um, just remember that the previous lows are potential areas of reversal. And I'm going to keep saying it so you guys can remember it. I know my subscribers are sick and tired of me saying it, and I'm sorry to those dudes and gals. But for you new guys, you need to hear it. There it goes. Magic. Hi, John. Yeah, I would not be deploying cash right now. No. Um, I think we have more of a correction to come. Okay, I think we have to get through the flu season. We have to let the realization that the economy is not going back to normal. Don't look at the price of stocks and think that's what the economy is doing. Let the realization set that this is a prolonged recession. I would call it a depression. Um, there's always going to be parts of the economy that are going to improve, and there's going to be parts of the economy that are going to get worse. Okay. Um, my benchmark um, is January 2020, 3.4% unemployment, everything firing on all cylinders, everything looks great, and 70% of GDP is consumption. So I'm not saying that we have to be at 3.4% for you to go out and invest your money. It's not what I'm saying. And I'm not saying that it has to get that low in order for the market to go up. Of course not. But you want to measure how much damage in the economy has been done from that point, and then figure out where the bottom is. As I've said before on public videos, uh, the when it's time to buy, you're gonna feel like an idiot. Okay, everybody's gonna be telling you how bad it is. It's never gonna get better. La la la. That's when it's gonna be time to buy. Okay, it's the opposite of what's happening now, right? You have the buy the dippers. Oh, market is going up, not because of liquidity, right? What happened today? What happened? No liquidity, market goes down, right? Yeah, this could be the M pattern of SPX for sure, for sure. Uh, it meets the criteria. It's a shallow one. There's no question about it, uh, but it does fit the criteria. Uh, so I hope I answered your question, John. Um, again, I'm not a financial advisor. I don't know what your financial situation is. Everybody has their own thing. Uh, it's the same thing with like giving trade signals. I don't give trade signals. I do live trades so everybody can see what I do. Doesn't mean I do it always right. Uh, but you can never, even if I told you right now, buy or sell, everybody will have different outcomes at the end. Trading signals do not work. So if you guys go and subscribe to some trading signal, you're wasting your time. Because whoever the host is going to be is like, well, you didn't buy when I bought. Well, you didn't sell when I sell. Well, you didn't buy enough. Well, you didn't sell enough. And you're going to feel like a dog chasing its tail. All right, there's a little bounce. We got 5 minutes left in the session. Can this be identified as a wave C? Unfortunately, yes. You never know when a wave is going to end. It doesn't mean it's got to be long. As long as it breaks the previous low, that's good enough. I still think it's going to go lower, but I'm just saying on a bare knuckle charting, technically, that's valid, right? Um, the other key point I would want you to pay attention to is that it's building pressure here. Okay, it's building that pressure. And when it starts building pressure, it resolves its way one way or another. Usually to the downside because it came from the top, but just kind of keep that in mind. Point of control is 33.71, right above us here. I don't know if you can see it. Okay, and that's for intraday. This is just for today. So the price that was the fairest to do business today was 33.71 based on all the volume and price. Now, if you remember, we were measuring this move up, right? If you remember, we had kind of a P, right? And and I said this is more short covering than anything else. And now look towards the end of the day how much volume came in at this price. Because of the point of control used to be up here, now it's down here. A lot of volume just came in right here. But it's within the context of this structure, of course. So it's building that pressure right now. And then it's going to resolve itself to the downside more likely than not because the structure is pointing one way and then you get the result in the opposite direction. And that's why people get fooled often. All right, 2 more minutes less. All right, there it is. Market close, 4 o'clock. All right. Well, what did I say? Magnet, right? It's going to act like a magnet. Where did it close? Boom. Right at the magnet area. My suspicion that it didn't collapse today completely is because of the structure. Okay, and it's also because of uh, the value area. Uh, it's still holding it up. There wasn't enough time in the day to do what it had to do. Um, I'm very interested to see what tomorrow's going to bring tonight actually. Tomorrow for China. Again, my bias is that it's going to resolve to the downside. Eventually, it's going to take some time. It's not going to happen in a day, but you're going to get that resolution to the downside. And at the very least, you could get a head test here, all right, and then maybe it will bounce. Maybe you get a bounce from here or something. Oops, no, don't want to do that. All right, but does it have to come this low? Doesn't have to do anything, but I'm just telling you what the likelihood is. Okay. That's it. Let's look at the fangs before we go. Just do a quick recap, real quick. All right. They broke down. Uh, the flag is broken. All right. Market leaders, they're not looking good. End of day, the market closed down only 1%, but remember, we were up 1.5% or more. Utilities led the way, which is not what you want to be leading. Energy, which has been decimated. Materials, inflation trade. Consumer staples, Amazon, not Amazon, Walmart. Financials have been lagging forever and a day. Industrials, real estate, and technology came in near the bottom. Consumer discretionary, the worst. Amazon. All right. So we're going lower, in my opinion. Uh, the Fangs ended up down 2.82% for the day. Transportation finally did give it up. Another bear flag. Uh, where is it at? China is still holding on here. Okay, it bounced, but we'll see how it behaves later on tonight. Japan held up. Australia still holding up, but it is a structure below a structure. Nifty 50 broke out and near that previous high here, so we could get a reversal at any point at this area. Okay, remember that it's either just before the high, just at the high, or just we break the high and then everything reverses, right? You don't know when a wave is going to end. Um, Korea, South Korea, uh, still doing good. Germany, bear flag. UK, forget about them. Taiwan, right up against resistance, still holding up. I'm going to be interested to see how it does tomorrow. Brazil came back down. Saudi is testing the previous high here. All right, I expect this one to reverse. Oil back up above 40, still holding on. I don't think that's going to hold. Remember, oil is based on demand. Bitcoin still in this wedgie kind of pattern, structure above a structure kind of deal, right? Um, I'm kind of losing faith in it a little bit, to be honest with you. I think it should be behaving better. Gold, all right. Sure, if they're not going to print more, no monetary inflation, so it could sell off more here. Um, the dollar bounce, of course, makes sense. Okay. Um, Euro still holding, but now it's got a decision to make. If it breaks from here, then we can see a lot further depreciation in the euro. What else? US CAD, this one we were talking about, it broke down and then now it's back in structure. So we got to be careful with that. All right, once it comes back in structure, you can really take off. Okay, so just be cautious with that. Uh, when I look at the FANGs, Facebook 2.3, Amazon 3.2, um, Apple almost 3%, 2.9, Netflix 2.9, Nvidia positive for the day. But again, this is one of my favorite stocks. This one, I don't give a shit if the world blows up. I'm still buying that one. Uh, Google breaking the bear flag. Tesla, Tesla, Tesla is rolling over. This one definitely has an M pattern. Right? There's no question about that. Right? It's an M pattern. So look for this one to continue on down over the course of time. Airlines down about 3%. I think it's going to be even more. But remember, for investors, we don't look at things the way average people look at it, where they're laying off people. To investors, it's like okay, they're becoming more efficient. So it's not necessarily as bearish. Not that it's not bad, it's bad, but it's not as bearish as one may perceive it to be. Okay, so keep that in mind. And that's about it. All right, guys. Uh, Again, come down, subscribe. You get a little, you get a lot more info. Right, Patreon.com/RealMacro. Right, we have different plans here. Come on down and subscribe. Well, I'll probably be back tomorrow. Do another live session of how to bare knuckle chart. Last one. This is the equal weighted ETF of S&P, and it's still broken out, but it does have the lower high, right? See it? So that's an M pattern. All right, guys, that's it. Talk to you soon. Thank you very much for hanging around. Talk to you guys soon. Take care.